Hey, mortgage rates are climbing again. Imagine that. And hey, you know what? Inventory is exploding too. And buyers, well, suddenly have something they haven't had in a long time. And that's leverage. We're going to talk about that today. But good morning, everyone, and welcome to What's Up with Real Estate. We are live and think anything can happen. Headlines can change, rates can move, and technology can break. And honestly, that's half the fun. So, hey, today we're going to talk about where inventory is piling up, why job growth may not be as strong as the headlines suggest, and why mortgage rates continue to rise. And good morning, Soul. Are buyers finally getting some breathing room, do you think?
They are indeed, but only if they use that leverage wisely. We'll help them figure that out today. So let's jump right into where these homes are hiding.
Yeah, so hey, where are the homes? And hey, here's what nobody's talking about. Nearly one third of America's housing inventory is sitting in just two states. Want to guess? Texas is one, Florida is the other. And there are now roughly 1 million homes for sale nationwide. That's up 5% from last year, but still below pre pandemic norms overall. What's fascinating, though, is where the inventory is showing up. Texas and Florida alone account for 30% of all active inventory, despite only representing about 16% of the population. Meanwhile, some northeastern states are still dramatically below 2019 inventory levels. So, depending upon where you live, this market may feel completely different. So, does higher inventory automatically mean lower prices?
Not necessarily. More inventory gives buyers negotiating power first, but price drops usually follow only if those homes sit longer. So the leverage is in the timing.
So,
So, Mac, are you seeing that leverage play out in Houston right now? Or
we're
are
yeah, we're definitely seeing more options for buyers, more price reductions, fewer bidding wars than we saw 2 years ago, and sellers who aren't realistic are sitting. And we reported earlier in the month or last month that that 450,000 new listings that were listed in 2025 came back on the market in 2026. And in Houston, Sugar Land, Katy, buyers, well, finally have time to think again instead of just having to make a panic, decision in 20 minutes or so. Are homes moving slower in your area right now? Drop your city in the comments below. I live in Pearland, and I can tell you homes are sitting. Not just homes for sale, but rental homes are sitting. So yes, buyers finally have more choices, which means sellers may need something they haven't had since 2021. And what is that? So
patience? Sellers dust off those negotiation skills. And speaking of patience, let's talk about that job market next.
let's do it. Let's do it. So modest job growth. This jobs report looked decent on the surface until you actually read the details. ADP reported 109,000 private sector jobs added in April. Better than March? Yeah. Strong economy? Who knows? Most of the growth came from small business, and many of those jobs tended to be, are you ready? Part-time or low-paying positions. The labor market still matters enormously because jobs drive consumer confidence, and consumer confidence drives housing demand. So, why should homebuyers care about the ADP report?
Because housing follows confidence. If people worry about job stability, they hit pause on big purchases, like homes.
Yeah. So,
Mac, with that in mind, are you seeing buyers still moving forward even with these economic uncertainties?
yeah, cautiously. It's really payment sensitive. Buyers today are calculating affordability, and one of the things that we do that we believe is that makes us unique is we're very well versed with regards to the real estate tax calculations for a primary residence. And if you're working with a lender that's not familiar with those ideas and concepts and the mathematical equations connected to that, you could be making a decision to not buy a home that might be more affordable with the homestead exemption. In Houston, we still benefit from energy, healthcare, and port related industries, but affordability pressure is very, very high right now. And I think a lot of that is attributed to insurance as well as taxes. So Do you think the economy is stronger or weaker than headlines are telling us? Drop an agree or disagree. And hey, you know what? Unlike our HOA, your HOA, mortgage rates actually can come down, hopefully. And speaking of HOA, here's a message from our newest sponsor.
Tired of home service hassles? Introducing HOA Share, your trusted partner for local services. The only HOA platform that pays you back. Earn cash back on every service, tracked in real time. Easily manage payments, all in one place. From plumbing to home cleaning and more, HOA Share connects you to trusted service providers. Connect, buy and sell, get notified, and more. HOA Share, your HOA finally worth something.
Yeah, so you can imagine, right? What if your HOA actually worked for you? With HOA Share, homeowners can connect with trusted vendors, manage community service, and even participate in a platform designed around transparency, community engagement to bring real identity back to communities, to bring real, to reclaim communities. I think far too often, if we look at the broader landscape connected to social media and its monetization of identity, monetization of anything that it might be connected to without bringing any real tangible value back to the economy. That's what HOA Share does. So with that said, we're going to move on to talking point number 3. Mortgage rates, well, they moved higher again for the second straight week, and global tensions are the reason. And I know I just got gas, and for the premium gas that I normally buy, it's almost $6 a gallon. But hey, I digress. We're going to talk about mortgage rates. Average 30-year fixed rate mortgages rates are now sitting around 6.37. That's higher than just a week ago, largely because bond markets are reacting to geopolitical instability and rising energy costs tied to the Iran-U.S. conflict. And I had an agent ask me at a CE course this week what was I seeing with regards to interest rates? And I thought it was really, really simple. It just depends upon what the headline says. If the headline says ceasefire, rates are getting better. If it says bombing, rates are getting worse. And it seems to be like a roller coaster. Might be the best way to put that into context. But here's the important context. Rates are still roughly 0.40 lower than they were the same time last year. And if global tensions cool, mortgage rates will improve quickly. Now, how low they go, undetermined, right? Because we're still going to be battling inflation for some time. So why do global conflicts impact mortgage rates?
Global conflicts create uncertainty. Bond markets get spooked, and when investors fear inflation or instability, rates climb. It's all about risk.
Yeah. So,
Mac, when rates rise like this, what's the biggest mistake you see buyers making?
waiting for the perfect moment. And I don't believe that there is a perfect moment. I believe the way that you mitigate and or create that perfect moment for you is preparation. And we believe in that an educated buyer is an empowered buyer. An empowered buyer feels confident with the financial decisions that they have to make. And look, far too often we see people making decisions based upon subjective information. They'll call, they'll get a piece of information from me, and they'll make a big financial decision based upon one piece of information. It's like trying to visualize a puzzle without actually putting all the pieces together in one place, putting the puzzle together so you can get a clear picture of what the real financial obligations look like so that you can feel confident with your decision. In Texas right now, buyers may actually have and do have more negotiating power than they've had in years. And if rates drop to 5.5, would you buy immediately? Drop us let me know what your thoughts are in the comment section. And at this point, mortgage rates react faster than social media during a celebrity breakup. I mean, we need stability, we need consistency, we need planning, and we need intelligence in Washington, D.C. Period. And I don't care what political spectrum you're on. There isn't a great deal of intelligence in Washington, D.C. There is exploitation and extraction. And this brings us to today's mortgage tip, and we're going to move on from that political comment. We've said this before. Most buyers don't lose homes because they lack money. They lose homes because they're just not prepared. And pre-qualified versus pre-approval, I know the two sound similar, but they are absolutely not the same thing. A pre-qualification is basically an estimate based upon information provided verbally. A pre-approval, however, means documents were reviewed, income was verified, credit was checked, and underwriting confidence is significantly stronger than pre-qualification. And in competitive Houston areas, markets, that can make a big, big difference. So why does pre-approval carry so much weight with sellers?
Because sellers want certainty. A pre-approval shows you've already cleared major financial hurdles, so your offer feels rock solid.
Yeah, so
Mac, what's the advantage of your process specifically when it comes to getting buyers pre-approved?
well, we believe that we help buyers and their agents win. And the way that we do that objectively in connection with our relationship with the buyers, we call it E to the power 4. We mentioned it previously. We believe an educated buyer is an empowered buyer. How do we educate? We spend time with people. We invite everyone to come visit with us, spend an hour with us. We'll share our 33 years of experience with you for free. It's a one-on-one consultation, and we'll help build a financial framework so that you feel empowered with the financial decisions you have to make. And we believe that if a buyer is educated and empowered, they are prepared to execute when they sign the contract. And we know, based upon our 5-star reviews, which were up to 190, if you count our Google My Business page, you count our Facebook page, you count our Bird's Eye, and they'll have a meaningful experience. And that, I believe, is the proof, because most of those reviews have come in our first 5 years here at Ray. In Houston, Katy, Cypress, Sugarland, and the Woodlands, many listing agents won't even submit an offer without a strong pre-approval letter. And hey, if you're listening, have you ever lost a home in a multiple offer situation? Tell us what happened and tell us what your experience was. And if you want a strategy session, not a sales pitch, go look us up on Google at #MortgageMack, #TeamMortgageMack. Find our calendar on our Google My Business page and schedule some time with yours truly. We'd be delighted to spend some time with you, building a framework, building a foundation to help you become successful. Being pre-qualified without being pre-approved is kind of like showing up to the rodeo on a what? So on a stick horse, but nobody's impressed. And honestly, that's a perfect segue to this week's Stoic quote. Every difficulty in life presents us with an opportunity to turn inward and to invoke our own inner resources. So,
Markets, rates, and circumstances change, but having that inner resilience, that's what helps us adapt. So, what challenge has helped you grow stronger? Let us know.
yeah, please drop us a note. And I know just from being alive for as long as I have that life is just full of challenges. And I've adopted the Stoic lens of viewing the world through the virtues connected to wisdom, courage, justice, and self-discipline. And not perfect, but am working on it and looking to improve. And what's interesting is even ancient philosophers understood modern underwriting stresses. And speaking of emotional challenges, let's have a little fun with this week's Fun with Puns. So, are you ready?
I am always ready for puns. Let's lighten the mood. Hit me with your best pun of the day.
Roman provinces had a Latin common. Sting was kidnapped, and the police, well, they have no lead. Help me out here, so you have to be odd to be number one. I know that's true. I know that's true. And a full Hellman's jar in the ocean, so Cinco de Mayo. And so, are you still with us, or did you go get coffee? Okay, so Luke was looking for love in Alderon places. And if a sink knocks on your door, well, let that sink in. And before we lose subscribers, let's wrap this up. If this helped you understand what's really happened in the market this past week, hit subscribe, follow, and share with someone who needs clarity. And if you want to plan on a pitch, book some time with Team Mortgage Mack, and we'll walk you through it the right way. And join us here every Saturday, 10 a.m. Until next time, stay informed, stay engaged, and we'll see you at closing. So, do you want to say bye? I guess so. Had to go get some coffee. Bye.
Late nights, early mornings, he stays on the grind. Looking past the rate sheet for the value you'll find. He listens, he hustles, he speaks with intent.